Hi, everyone. I'm Diane Donnelly with the Donnelly Group in Keller Williams Flagship of Maryland, and I run a small real estate team here in Annapolis. And today we're going to be talking about stocks and how are stocks influenced, and is it better to have a Republican or a Democratic president, and does it matter? And today, our host, who is Pablo Alvarado with LPL Financial, is going to be talking to us today. He is a certified financial planner and comes to us with a ton of knowledge and historical data. So welcome, Pablo, and tell us a little bit about who you are.
Hi, good morning, Diane. It's good to be here with you again. Pablo Alvarado, certified financial planner, and I currently serving about 150 families, their businesses, and we thoughtful financial planning is what it comes down to. In times like this, there's a lot of headlines coming at you. The flow of information is super fast, and it's easy for people to get distracted and at times get spooked. But my job is to keep people on track, keep them focused on their own plans, not their neighbor's plans, their brother, sister, whoever it may be, or what they saw on TV. My focus is to keep you focused on your own plan so that you can retire on your own terms.
I love that, especially as I'm nearing retirement myself, a few years out, right, Bob?
I think you want to do 10 years was
Max,
was your target. Yep.
max 10 years, hopefully 7.
All
You're going to help
right.
me. But until then, let's talk stocks.
All right.
My first question, Pablo, is do stocks care who is in office?
That's it could be a simple yes or no question, but let's peel the layers a little bit. Let's go down memory lane and let's look at what I personally consider probably the most contentious election of recent years, and that was the 2000 election. We had then Governor George W. Bush running for the presidential. He was a Republican nominee, and then we have Vice President Gore coming in after 8 years as serving as vice president. And if you recall, that election came down to a couple of boxes of ballots that one side said no, they don't need to be counted. We don't know where they came from. And the other side said every count votes, and the Supreme Court has to step in. I think it was almost 8 weeks later when the Supreme Court says, nope, it stops right here. And I think it was several hundred votes is what it came down to. And if you recall back then, some of the arguments that were being made on the Democratic side was, hey, we built this strong economies, the stock markets have done very well. Why shall we let somebody else come in here and wreck it? We want to continue that same track record. We step, forward several years later. We have the 2016 election, and again, that was the same argument. We have just come out of 8 years of President Obama's term, and a lot of the same arguments were being made. In fact, on election night, when it looked like Donald Trump was going to be the president, stock futures, or the indications of what the market was going to do this next day, went down as much as 5%. And that's pretty big on a single day for the stock market. But ultimately, does it come down to, does the stock market care? Well, ultimately, no. Yes and no. No, because the president doesn't have ultimate power to make decisions, to implement policy. They can be very influential, don't get me wrong, but there is no single thing that the president can do that will affect everything.
On purpose. That's
on purpose, and that is on purpose. So so ultimately, yes, the stock market cares because they also see the role of the president as one that is very important. Very influential. They can definitely influence policy. If you remember in 2000, after the 2008 election, when President Obama took office, he came in with a supermajority in both chambers. So he was very influential into making sure that laws were going to be passed according to his agenda. And there was none bigger than the ACA, the Affordable Care Act. That was the only way it was able to pass, because there were enough majorities from his own party in Congress to make that happen. Without a majority in both chambers, we wouldn't have the ACA today.
Okay, so who's better for stocks then? Republicans or Democratic president?
Wow, you're full of great questions today, Diane. That's, you know, this can go in different ways, and it could be looked at we have to look at it in context. If we go back to since 1920, and we compare Democrat administrations and Republican administrations, Democrat administrations have an average of about 10.85% returns for the stock market during their tenures versus 1.74% for Republican administrations. And one would think that, oh my God, Republicans, might not be so good for the economy, but it's just, the timing, the musical chair effect, who got stuck with the bags at the end. Let's go back to 2000 as more recently here. When we had President Bush take office, almost immediately we had the tech bubble. Stock market lost almost 45% of its value in a very short period of time. The NASDAQ lost almost 60%, none of which were influenced by him being the president. Had nothing to do with the president being there. Then we
What
had.
did it have to do with, Pablo?
It has to do with, number one, the business cycles, stock valuations, a lot of fundamental things that we should be looking at when we invest money. It has to do with corporate profits. It has to do with how strong the economy is, or all those metrics that are in place. The markets get too hot too fast.
Mm-hmm.
And those cannot be influenced by any president or anybody in office at any single level. Those are just the mechanics of a functioning economy. We have peaks and we have troughs.
I remember when we were going through the most recent political campaign, and I was talking to you and I said, what happens if Trump wins? What happens if a Democrat wins? And you were talking about, this is what you brought back, that it's not about Biden, it's not about Trump, it's about these business cycles and these things that we're going to talk about. And that is what your job is to not get swayed either way. And today we're talking from a nonpartisan perspective. We're talking just about stocks and what influences them. And I think popular belief is that the Republicans or a Republican president will help fiscally, and the Democratic perspective, it will not be good for the economy. And I've heard that repeated over and over. So then you turn to data and you say, well, let's look at the data and let's figure out what the real story is. So that's what we're talking about today, is what is the story and what is the history, and what really does influence stocks. So what kinds of things can we pay attention to, meaning you and people who are doing their own finances? What kinds of things should they be looking for outside of the presidential, whoever is the president at the time? What things should we be paying attention to? And you started to touch on that.
Yep. Number one, you have to build a plan for yourself. You have to have a vision. You don't necessarily have to have 100% of a vision, whether that vision is sitting at the beach with, under a beach umbrella with a little umbrella on your drink, or whether it's just sitting at home working on your garden, whatever that is, travel. You have to have a plan and at least know what it is that you have to plan for, because retirement doesn't come for free. And you don't get a do-over, because when you retire, your ability to earn an income, at that point, you've given that up. You stop going to work every morning. That's the very thing that you wanted to stop at some point. So now you have to make sure that everything that you put in place, all the money that you saved, all the money that you invested, is going to provide the income that you're going to need to meet your objectives during retirement. So first and foremost, you have to have a plan. You have to be disciplined, and at times you have to have the fortitude to see that plan through.
Mm-hmm.
Back,
and sometimes you have to be disciplined to say, no, I want to retire more than I want what I want right now.
exactly.
Right. So
We
what is
have,
the bigger, the prize? Is it the immediate
yeah,
satisfaction of what you want right now?
yeah,
Or is it being willing to put off so that you can do and make choices different than you're making today?
yes,
Because you're in a different financial spot at that
yes.
time because of the decisions that you're making today.
Yeah, there have been times where I've had to ask myself, do I really need this new car?
Mm-hmm.
How much of my
How is the new
retirement?
car going, by the way?
What's that?
How is the new car?
I don't have a new car right now, but I'm looking at a new car that just to replace the one I'm driving right now is minimum of $50,000.
Yeah,
And when
it's
I
crazy.
bought it, it was in the mid 30s, and it
Wow.
wasn't that long ago. So that's inflation eroding the purchasing power of your dollars. So we have to make sure, do we want to erode that dollar right now, or do we want to grow it for the future?
Yeah, and one of the other questions that I had was, does the United States president have the power to influence stocks and economy? And how does the power of our presidency compare to that of other countries?
Yep. When we look at executive power, by design, the founding fathers, they wanted to have separation of powers. That's why we have three different branches. That's why we have a federal government, which covers all three branches. And that's why we have the states who are separate entities. And under the 10th Amendment, states are allowed to govern themselves. There are 13 individual enumerated powers that the federal government has. Everything else goes to the states. And that's on purpose, because founding fathers were very skeptical about tyrannical governments. That's the very thing that we had fought against back then, and that's what we were trying to get away from. And at least that was their thought process. And here we are 270 years later. The system's still in place. The United States president can influence policies, as we spoke earlier. He or she can set an agenda. That doesn't mean that that agenda has to be followed or implemented, but the president is very influential. But again, no single executive order is going to change everything.
Mhm.
And I would argue that the Federal Reserve Bank, the Fed chair, today we have Jerome Powell, probably has far more influence and power to influence the stock market and the economy than any single entity in the United States.
Mhm.
The Federal Reserve, they control the interest rates. And you and I both know what that's like and what that means to our businesses.
Mhm. Right.
They have the ability to influence monetary policy. That's the flow of money. That's very important to our business. Uh, the that they also have the ability to regulate banks. They set reserve requirements for banks, and so the stock market listens more to what the Federal Reserve does and what the Federal Reserve is seeing in their analysis than what the president says or does.
Would you say the Federal Reserve has the most influence on stock than anything else?
Yes, absolutely, without a doubt. Also, the Treasury Department. I mean, that's another. It's an independent entity, but they work hand in hand with the Federal Reserve. Now, where the president can, there are times where the president can instill optimism,
Mhm.
and
Or the
markets will
opposite,
react.
right? Or the
Yep,
opposite.
or the opposite.
Create fear and skepticism. He's got the influence, or he or she
Yep.
has the influence to do that and to set
Yep.
the mood and the climate,
Yep.
sometimes despite the data, right?
Yeah. Yeah, absolutely. I'll give you an example of that. Back in heading into 2008, if you remember, we were in the middle of the biggest financial crisis that we had seen since the Great Depression. And it was clear that President Obama was going to win. And after his election, the markets reacted positively, but they reacted more positively when he started picking his cabinet.
Mm.
When he selected the Treasury Department, announced who was going to be the Treasury Department head, who was going to be the Federal Reserve head. And those two key positions, really, the market really liked it and reacted very positively to it. So that's where the president's influence can become a big part. Is not an is the president is no one to ignore, but certainly we don't hinge our financial decisions based on what the president is saying or trying to do.
Paulo, show me some data to support what we're talking about here.
Yep. Let me show you a chart. This is going back to the 1920s. The top performing administrations for the stock market. And again, we've established that that's not a function of who's in office, but I thought it was very interesting to see. Let me point out, number one was FDR. In the years of, between 1933 and 1937, the stock market saw a 205% return during those 4 years. Now, why was that? Let's go back to all the way at the bottom. We had just come out of the Hoover administration. This is when the stock market crash of 1921 happened. The market had gone down 77% during those 4 years. The first 4 years of FDR, the market was down 40%. So the markets during the second administration of FDR were just catching up. We're just starting to maybe get back to par. Then we have Bill Clinton. He presided over some of the best 8 years for the stock market that we've seen in a very long time. In fact, we haven't been able to duplicate that kind of growth in the stock market. Then we have President Obama. The first 4 years of his administration, the market went up 90%. And to put it into context, we have just come out of markets dropping as much as 60% coming into his first day in office. So we have to put him into context. This is not to say that anything that any of these presidents did were influence the stock market to perform good or bad. But I thought this was a cool chart.
I really like this chart too. What is the source of this information?
This is Forbes.
Okay. Yeah, that's very interesting.
Yeah.
Sum this up for us. So we've heard a lot about that. Sounds to me that the president influences things, but it is not necessarily the stocks, and the stocks do not perform poorly or greatly dependent upon the president. So sum this up for us, Pablo.
Okay. I think we have to look at things from a practical perspective. It comes down to what I said in the beginning. We have to have a plan for ourselves based on what our goals are, based on what our needs are, based on what it is that we can do now. Not everyone else's, not what a relative or a friend has done or a neighbor has done. It has to be your goals, your plan. Stick to the plan. Invest in quality. Invest often. Reinvest all your dividends and interest. Do not touch your retirement money for anything. And ignore the noise.
Ignore the
Ignore the
noise.
headlines.
The flip. There's a lot of noise.
I got an email from a client with, a little bit freaking out a little bit because there was a headline out there saying that, stocks are getting too hot, and, that there are some stocks that have lost as much as 40%. Well, that's always going to happen, but that's not what you're invested in. Back in heading into 2016, I was in a conference call with a very, very highly respected portfolio manager, money manager that I've been following for since right at the beginning of the financial crisis. It's been almost 13 years. And I was on a conference call with him, and he had just put out a white paper for financial professionals. And the headline on this white paper was "Mute the TV" or "Turn the TV off." There's a lot of noise out there. You're going to hear a lot of noise on the 2016 cycle, and that's nothing new. Mute the TV, stick to what you're doing, stick to what you know, stick to your plan.
Stick to the plan.
Stick to the plan. Let a candidate and their policies and their character, to let them influence your vote, not your wallet.
Very good. That was really well said. So, one thing that I've done several times is I've opened up my books and said, okay, take a look at this. This is what my goal is for retirement. And I'm having very serious conversations about that now as I get closer.
Yep.
And the line of questioning is very interesting, because I feel as though if I just say, hey, I want to retire when I'm 60, what's the plan? And you don't ask me questions, you don't understand my goal.
No.
You cannot possibly give me a plan that's going to reach my goal because you don't know it.
Yep.
So conversation's over. We won't go any further.
Right.
When I talked to you, Pablo, about my financial goals, and you said, okay, here's what we're going to do, and you asked me questions for a half hour. That's what I like to see. I want you to understand what my goals are, what my challenges are, where some blocks may be, where there's some opportunity, where there's some answers, what I have to change, what I need to keep doing. But you're a problem solver. You're a problem solver. And the challenge is whatever your goal is. This is my goal. Pablo, help me to get there. What do I need to do? And you ask the right questions to help to be able to formulate the custom financial plan, because every single one of us is different, as you've stated. So I appreciate you taking the time to do that for people.
Well, thank you very much. It's in this business, you have to be willing, if you are going to be in charge, at the helm of someone's financial future. We owe it to our clients to ask those questions. And I'll tell you a quick story really quick. I've had clients who I've had to have some conversations where I thought I was going to get kicked out of the house because they needed to hear a dose of reality. They needed that shot of reality. I sat down with clients who have been dear friends of mine for over 20 years, had been clients of mine for 15. And I remember I had to go to their house and did a review of their plan. The husband couldn't work anymore. He was in that gray area of disability. He couldn't get disability from Social Security, but yet he couldn't work. But yet Social Security didn't deem him to be enough disabled, and so he couldn't work anymore. And I told him, if you stay in this house, if you continue to spend at the rate that you're spending, you're gonna have to, you could potentially deplete all of your money in a short period of time and potentially lose this house in the process. Here's what
conversation, right?
Oh my God. I mean, I was my knees felt like bubble gum having that conversations. My hands were sweaty. And I remember telling them, here's what you need to do. You need to sell this house, take the equity, move somewhere where the cost of living is lower, buy a house for cash for what you have in cash from this house, and you will be okay. That's your only shot. Didn't get a response right away until a couple of weeks later. I got a call and say, hey, guess what? We picked a town in Georgia. We put an offer on a house. We're putting our house on the market. We're out of here.
Wonderful.
So they took the advice. I told them, look, I was worried. I didn't know what your reaction was going to be.
Well, I applaud you for telling the
Yep.
truth
You have to.
over telling somebody what they wanted to hear just because you wanted to soften it. And that's
Yeah.
on my side, the same thing. I have to very oftentimes give news that people don't want to hear, but I'm not going to inflate a sales value, for example, because that's what they're looking for.
Yeah.
It's not credible. It's not fair. It's not appropriate. And I applaud you for doing the right thing. You know,
Thank you.
It's the harder decision, but probably if people wanted to get a hold of you, how do they do that?
I can put my information on the chat.
Okay.
I'll put my cell phone is usually the easiest way.
Okay.
My email also is it's also a good place to start. And
Okay.
any questions that any of your clients, any of the viewers have, please feel free to reach out to me.
Okay. And we'll put it below on the link below here as well.
Okay.
On Facebook and on YouTube, etc.
Wonderful.
Okay. All right, you guys, thank you so much, everybody, for tuning in. I appreciate you listening. Pablo, I appreciate your time and your talents and sharing that with us. And
Thank
we
you
look
for
forward
having me.
to, oh, you're very welcome.
All right. Have a good Wednesday, everyone.
Thanks. Take care,
Okay.
guys. Bye-bye.